In this video, I'm going to explain to you why you should be using your investment ISA to build long-term wealth and show you step by step how to become an ISA millionaire, just like this guy. So let's get into it. Okay, so first of all, let me explain what an ISA is. It stands for Individual Savings Account. It's like a normal bank account, except it's within a tax wrapper, i.e. anything that you save in that account is protected from tax forever. You have probably heard the term ISA many times before, but did you know there's actually 4 types of main ISA? They are cash ISA, investment ISA, also known as stocks and shares ISA, innovative finance ISA, and lifetime ISA. In order to qualify for any of these ISAs, you need to be a tax resident in the UK and be over 16. For an investment ISA, what we're going to talk about today, you have to be over 18. There are also junior ISAs for people younger than this, but that's another topic for another video. Currently, you're given an allowance of £20,000 a year to put into your ISA accounts. Now you can choose to split this £20,000 into different types of ISA, but be aware you can't put money into 2 of the same type of ISA in any given tax year. I'll discuss all the different types of ISA in another video, but in today's video, I want to concentrate on investment ISAs, as this is your ticket to becoming a tax-free millionaire in the future. An investment ISA is where you can choose to invest your money in a range of different financial products. These could be stocks and shares, government or corporate bonds, or property REITs. Unlike a cash ISA, where you receive a guaranteed rate of interest, with an investment ISA, you are investing. Now remember, when you're investing, your money is at risk. The value of your money can go up or down depending on the performance of the investment you've made. But as always, when we're taking higher risk, we're also expecting higher reward. And reward can come in 3 main ways. Number 1, the value of your investment can appreciate over time, i.e. go up in value. Number 2, you can receive dividends from the stocks and shares that you own. Or number 3, you can receive interest from corporate or government bonds that you own. As a side note, with any type of investing, you'd only be using money that you're not going to need or want in the next 10 years, and you need to be willing to ride out the waves of your investment going up and down over time. This shouldn't be money that you're going to need in case of an emergency, or money that you're putting aside for another investment in the near future. For more information on emergency funds and why they're critical to personal finance, click the link that's going to appear just above my head here. So that being said, if you're wanting to invest, then you should go down the route of using an investment ISA over a normal trading account. And here's why. When I say that an investment ISA is in a tax wrapper, what I actually mean is it's not subject to 3 types of taxes. Number 1 is capital gains tax. Now, assuming that the investment has gone up in value over time, this is the tax that you pay on the gain that you made between the purchase price and the selling price. Now, currently, outside of an ISA, you're allowed up to £12,300 a year in capital gains, tax-free. Thereafter, it's taxable. Number 2, in an investment ISA, you don't pay tax on the dividends you receive. Now, dividends are a bit like interest on a bank account, but instead, when you invest into a company and that company makes profits, they can pay some of that money back to you as a dividend. Now, outside of an investment ISA, anything over £2,000 you'd pay tax on. Inside the investment ISA, you don't. Number 3, you don't pay tax on the interest you receive from bonds. Now, simply put, bonds are a loan to either a company or the government. Outside of the investment ISA, you will pay tax on the interest received over and above your personal savings allowance. Inside the investment ISA, again, it's free of tax. Now, at this point, you might be saying to yourself, well, the return on my investments are nowhere near the levels required in order to pay tax. But remember, investing is a long-term game, and you don't know what your personal situation will be in 20 to 30 years' time. Now, hopefully, your investments will grow significantly over time, and your future self will thank you for not having to fill out yearly tax forms or having to pay a hefty tax bill when you want to sell your investments to buy a yacht or a retirement home in Marbella. Okay, so now that you've decided that an investment ISA is your ticket to financial freedom, you now need to consider what platform to invest through. You can open up an investment ISA through a number of different companies. This can be a retail bank, an online brokerage, or a phone app. But not all platforms are created equal, and you need to take into consideration the costs. Now, the cost can be made up of 3 different things. Number 1, platform charge. How much will the company charge you to invest through their platform? This may be a one-off fee each year or a percentage of the invested amount. Number 2, the trading fees. How much will they charge you to execute a trade? And number 3, the exit fees. How much will you be charged to transfer your ISA to another provider if you choose to do so? You should always take into consideration the costs of the platform that you're choosing to use, as these can have a significant effect on your overall return over time. Where possible, you want to minimise costs. Another consideration on what platform you'll use to open your investment ISA is on how you'll invest. Now, generally speaking, there are two types of platform. Number one is the do-it-yourself platform, which is exactly what it says on the tin. You'll have to research your own investments, choose what to invest in, and keep an eye on them and rebalance as you see fit. Now, generally, these platforms have the lowest fees, but you'll also need to know what you're doing. Having said that, by watching my videos, hopefully by now you'll know that I promote investing in low-cost diversified index funds which will provide you a reasonable return over time. I don't promote investing in individual stocks. And to learn more on why, click the link that's appearing above my head. Now, with the type of investing I promote, although it's do-it-yourself, it doesn't take much work at all. All you need to do is invest consistently and review and rebalance on a yearly basis. I truly believe that most individual investors can get superior and satisfactory results by investing in low-cost index funds and bonds over time. By the way, if you're interested in learning more about this investment strategy and why I consider it the best for most people, then I've linked to some books and some recommended reading in the description below. Some examples of do-it-yourself platforms include iWeb and FreeTrade. Now, FreeTrade is one of the lowest cost platforms out there, with an ISA management fee of just £3 a month, no trading fees and no exit fees. If you'd like a referral code for getting started on FreeTrade with a free stock between £3 and £200, then email me on the email I've listed in the description below. The second type of platform is the Do It For Me platform. Now, with this type of platform, it takes away the decisions on what to invest in, and instead the company will ask you a number of fact-finding questions to understand what your risk profile is, what your long-term goals are, and how much you want to invest. And then they'll recommend an investment portfolio for you. An example of this type of platform is Nutmeg, and they offer a range of different products, from fixed allocation, where they'll review your portfolio on a yearly basis, all the way through to a fully managed portfolio. Now, this more hands-on approach does come with higher costs on paper, with Nutmeg charging between 0.45 and 0.75% of your total investment amount up to £100,000. But as they invest in low-cost index funds, it may actually work out cheaper than do-it-yourself investors who invest in higher cost products such as mutual funds or high-cost index funds, or even actively trade on a consistent basis. Fundamentally, it will come down to how much time and effort you want to put into learning about investing and managing your own investments. For those of you that want to take away the headache, then investing in a platform like Nutmeg makes total sense, and is far better than leaving that cash on the sidelines to be eaten away by inflation. My question for today is, do you want to take control of your own investments, or would you rather someone else do it for you? And why? Let me know in the comments below. So now, let's talk about how you can become a tax-free millionaire by investing through your investment ISA. The recipe is simple, but it's not so easy. Number one, try to maximise your savings and utilise the full allowance of the ISA. Number two, use that money and invest in low-cost diversified index funds. Number three, keep reinvesting those dividends and investing on a consistent basis. Regardless if the market is at all-time highs or all-time lows, keep reinvesting. Now, this is easier said than done, because financial commentators will always be talking about the upcoming doom or despair of the financial markets. But trust me, just keep investing. And if the financial commentators are talking about it being the end of the world, then just remember my favourite quote from Warren Buffett. Be greedy when others are fearful, and be fearful when others are greedy. And then step 4, rinse and repeat until you become a millionaire. Now, let's take an example. Currently, you have an allowance of £20,000 a year to put into an investment ISA. Now, let's assume that you're fortunate enough to be able to do that. And let's assume that you can average an 8% year-on-year return from your investments. Now, historically speaking, if you can invest and hold for the long term, then that is very achievable. Over a 20-year period, and after investing £400,000, your investment fund will be worth £1.04 million. Now, for some of you, you may be thinking, waiting 20 years and saving all that money just isn't worth it. And that's your choice. It's not for everyone. But for others, like me, this slow but sure way to build long-term wealth is worth the sacrifice of today to have the freedom of choice in the future. Whilst we don't know what future returns look like, by following this process, it's very likely that you'll be in a position to be able to retire early with a very cushy pot of money to fall back on. And remember, if we can increase the average rate of return above 8%, or the allowance of the ISA amount goes up over time and we can save and invest more, then this time frame will get even shorter. If we take the earlier example a little bit further, then we can show the benefits of holding these investments within the tax-free ISA wrapper compared to holding it outside in a normal brokerage account. Based on the earlier example, we would have had £627,000 in capital appreciation of our investments. If we chose to sell all those investments, then we'd be in line for a lovely tax bill of £125,000 if we'd invested outside of the tax wrapper. Inside the investment ISA tax wrapper, that tax bill would be zero. Let's say that instead of selling the investment portfolio, you instead wanted to live off the dividends. If we assume a dividend yield of 3% on the total investment portfolio, then every year you'd be receiving dividends in and around £30,000. Inside an investment ISA, you'll be receiving that tax-free. But depending on your tax rate, outside of an ISA, you may be paying £9,500 of that every year to the taxman. The point I'm really trying to make is that regardless of the position that you find yourself in today, you don't know what position you're going to be in 20 to 30 years' time. So take advantage of the ISA allowance just in case. So in the words of Forrest Gump,
that's all I have to say about that.
So that being said, if you haven't done so already, hit that like and subscribe button for more great weekly content on personal finance and investing. And if you know somebody who would benefit from this video, please share it with them. And as always, I want to leave you with a quote. The best things in life are tax-free. Thank you so much for watching. Until next time.